Welcome to Property Auction Hunters, and if this is the first time you are joining us, welcome. Today you have the three hosts of the channel, myself, Jay Howard, Piotr Rusnek, and Saif Derzi. This evening, just by quick introduction for everybody who's just coming to really figure out who we are and how we do things. I started property in 2002, working for a family trust, and have transacted and traded on behalf of myself and clients over £700 million. Piotr has been a buying agent in London and moved into auctions very quickly. And actually, where I used to work in auctions, Piotr was my client. So that's how we know each other. And that's how we came to set up our consultancy business, Hammered, where we help people buy and sell properties at auction. And we set up a community called the Auction Buyers Club, where we have a focus group where we help people do more and more deals. But tonight isn't about myself and Piotr. That's just to get that bit out of the way. We are here for Mr. Saif Derzi. If you don't know who Saif is an absolute legend. I first heard about Saif from a couple of auctioneers within the auction house group who said they were very impressed with his professionalism and his ability to get deals done. And he says, if he says he's going to do something, he does it. So Saif has been trading now for a number of years, very, very impressively. But he comes from a pharmaceuticals background. And this evening, we are going to figure out why he made those changes, how he made those changes, and the impact on his business and how his business can impact you. We'll be talking about our retreat in Portugal in early October, and Saif will be reminiscing about retreats that he's been on and how those have positively impacted his businesses. So without too much faff and finagling, we're going to get on to Saif. Saif,
thanks for having me, Jay. Thanks for having me, Piotr. So look, I mean, I'm going to set the scene from the beginning for everyone. So if you guys hate dealing with builders, if you guys hate dealing with tenants, if you guys hate hassle, surveyors, you name it, today the webinar is for you, because that is the main reason why I started property trading. And that's the biggest kind of for me, that's the kind of biggest reason why I kind of transitioned even as a property investor into sort of trading. So today I'm going to be telling you all about sort of my journey, how I kind of started, how I transitioned, and kind of just the ups and downs that you go through when you're in business, and obviously when you're kind of in this property trading world. So my name's Saif Derzi. I am a pharmacist by trade. So back in sort of 2013, I graduated with a pharmacy degree. It was something I knew that I'd never really wanted to kind of continue to do forever. So I did about 2 years worth of pharmacy in the kind of corporate world. Ended up figuring out that it wasn't really for me because of the repetition in it. I then left that business and then basically set up my own business. It was a healthcare pharmaceutical business. What we were doing was we were helping a lot of UK manufacturers to actually export their products abroad. And it was a bit of an arbitrage play. So what we did was we put our commissions on top of their prices, went out and found buyers, and basically we invoiced for the difference. So nothing different to what we do in property today, which is what I'm going to talk to you about. But I did that in the pharma world. I then realized that I need something that I need to do with that money once we made it. And that's what got me into property. This was back in 2015. I bought my first property back then. I kind of trying to figure out what property is about, how do you do it, how can you kind of do it at a bigger scale. And for me, 2018 was kind of the next significant point beyond that. That's when I've actually incorporated our property businesses. We then went on to do another 5 deals back in 2018. And that's how we kind of started building out our property portfolio, which is what I thought we were going to do. So in my head, I kind of thought, okay, we're going to build out a property portfolio of sort of about 1,000 properties and maybe go for an exit. That's what I kind of had as a vision, as a kind of concept. But everything changed. And in 2019, I started working with property cash buying companies. So we started buying properties from property cash buying companies to get the discounts to allow us basically refurbish them, refinance them, and hold a bigger portfolio, which we did quite successfully. We reached a portfolio size of about 100 properties. But what happened was we ended up losing a lot of the control because a lot of these cash buying companies started to want to buy the properties in and maximize the actual discounts, etc., the margins that they would make. And that's when we sort of decided to have this pivotal shift. And it was back in 2019, Piotr was with me at the time. I ended up going on a mastermind retreat in Marbella with some really big property hitters. People probably know them in the industry. And the mindset shift for me was actually saying, okay, well, this is what I'm currently doing, but is it actually what I want to end up achieving? Do I actually want to end up having 1,000 properties? Is that something that I want to actually take on, the stress, the burden, put the time and effort into? And it was something that changed the way that I kind of thought about everything. And I thought, no, that's not what I want. But actually what I did look at is property trading. We even had the likes of Ross Harper there, which was, it was a game changer. And just this world of property trading is behind closed doors. So people don't talk about it. And the reason why people don't talk about it is because it is a secret world where people do make a lot of money. And the reality is if people are making money, they usually don't go on to talk about it. But for me, it's been one of my passions. Property trading is something that I'll do forever. It's not something that I'll kind of stop at or retire. Look, it is a very hands-on business. It's a business that requires a lot of time and effort. But if you can do it and you can do it really, really well, it is extremely, extremely rewarding financially. And for me, I went through that transition from 2019 to today, where we tried everything. We did new builds, we did rent to rent, we did HMOs, we did buy-to-lets. I've done every single thing. And I'm not saying that doesn't work for everyone, but for me, that just didn't work. I didn't want to deal with builders. I had enough of dealing with tenants. I had enough of dealing generally with the day-to-day hassles of asset management and managing portfolios. And the light bulb moment and the light bulb switch for me was when we sold some of our HMOs and we realized a big profit from them. We went from having no money in the bank because we were spending it on all these refurbishments to all of a sudden having 20, 30, 40,000 pounds come in as a result of these sales. And that's a massive mindset shift. That's a massive change in dynamic from what we thought we were going to basically be doing to actually what we started to do to actually try and get cash in the bank. And for me, that's when I went on this journey of basically, right, well, how do I find more properties? How can I buy more properties? And how can we then trade them? And part of trading is actually being able to know how to sell the properties really well. Hence why auction is your biggest friend when it comes to actually trying to sell your properties. Auction provides speed, it provides certainty, you can get money back in the bank so you can basically go again. So for me, it was really, really important. We kind of went through this whole journey of how do you get the stock? What do you do with it once you've got it to try and sort of figure out the best way to maximize it? And then what's your exit, right? So traditionally with property trading, just for those that kind of don't know property trading, you're effectively buying a property and you're selling it without actually doing much work to the property. So the difference between property trading and property flipping is when you're flipping, you're actually doing a lot of capital expenditure to improve the properties before you go on to sell it. And I think that's quite risky personally, because what you're doing is you're spending a lot of money, you're probably on some pretty expensive loans and bridges, and you're trying to maximize the value of the property and trying to hit basically ceiling price. Whereas what you're doing as a property trader is you're in and you're out, and you're allowing enough margin for someone to buy that property on to maybe then flip it, or maybe want to refurb it and live in it, or maybe refurb it and put a tenant in it. So for me, property trading is probably the least riskiest out of all the strategies out there, from being an investor, a developer, or a flipper in general. Now, just taking you back to kind of that 2019 moment, for me, not only was it a case of being able to pivot our businesses and basically try and bring a lot of what I kind of had that aha moment back to the team to try and tell them, look, this is what we're going to do to change our business. But spending time with those people has meant that I've got really, really good network and a black book of contacts that I can basically lean on whenever I need to. So when COVID hit, it was the most significant thing that ever happened to the property industry, as everyone knows, especially in the property auction world and property investment world. And if it wasn't for the contacts that I created when we were out in Marbella at the time and the people that I had close to me, these were the people that were really keeping me calm when everything else was on fire around us, if everyone remembers back to that COVID period. So for me, the networking aspect and having these people that you're spending a lot of time with outside of the day-to-day of your business, outside of the UK environment, was massive. And for me, that's kind of what really allowed me to build the network of people that really kind of decides how my decision-making is now made. So I use them as a bit of, go-to people to basically just soundboard the decision-making process for me. So that's kind of how I transitioned. That's where I went into property trading. Fast forward to today, we've done over 300 transactions. On average, we're doing 5 to 10 property purchases and sales a month. And it's something that I've thought about quite a lot in general from a point of view of what am I going to do in the future? And I think I'm always going to be a property trader by nature. And when you look at the biggest property traders in the industry, a lot of them might be 50, 60 years old, and they might be doing it for 25, 30 years. They've got plenty of cash, but they'll never retire because it's something that, for me, I found a passion with. So that's a bit about me. That's a bit about my kind of story in terms of, going out to basically become a property trader, all the way from a pharmacist to a property investor to a property trader. And yeah, I kind of welcome anyone that has any questions with regards to kind of that kind of journey, generally in terms of, masterminds and how powerful they can be. But Jay and Piotr, any thoughts on that or any questions from your end?
Yeah, I think I really like what you said about, once you're a property trader, you kind of stay in it, because in order to be a trader, I think people need to find their own strengths. And even just with the retreat, we're bringing like 7 or 8 guest speakers to the retreat, and you do trading, Oliver Adams does trading, and those two ways of trading could not be different, but you both play to your strengths. And the same, like when we do property trading, like we also focus on totally different things. We would not buy what you buy, and you probably wouldn't buy what we buy, but we still buy it and do something with it and then trade it. But we all focus on our strengths and where we feel we add value, and then we trade something on to the next person with some profit. And what I really like as well is, like, obviously we did that mastermind retreat in Marbella, which was amazing. And I got a lot from it as well, because it made me much more focused on what generates cash in our business in terms of selling properties for clients, and what the core things, and then what the good things to have once in a while, and those kind of cash additions. And like for me, that changed a lot in how I approach business. And what I like about sort of us doing business is we help to sell several properties to our clients, and I speak to those clients regularly, because these are our regular clients, and they make money from this, you make money from this, everyone made money from the transaction going forward. And the way you do trading and you approach this is really like ethical. Everyone makes money, but at the same time, it's everyone is happy and talks to like each other after a while, even so.
Yeah, and you know what, the trading world is very much that. So yes, although everyone is seen as a competitor, but at the same time, people trade to each other. Traders trade to each other, and the reason is what you've just said. Everyone finds a different angle on stuff. So there's traders that will buy stuff that I wouldn't have bought, especially not at the certain prices, and it would make a lot of money from it, where I missed something. It's not that necessarily that I missed something. They had a certain angle on it that I didn't. And the best thing about property trading is by learning from other people and seeing what, even today from what I do, learning to see what other people are doing when they're trading properties. And also they see what I do when I'm trading properties. It's probably the best thing to find little angles, how you can try and sort of find ways to maximize things. For example, I know certain property traders that will buy stuff with maybe 2 or 3 bathrooms. So it might be a 3-bed house with 2 or 3 bathrooms, which is not conventional. Rip out one of the bathrooms, make it into a bedroom without actually doing much of the work, and trade it on, because then that genuinely becomes a 4-bed, 1-bathroom property. So that is an angle where I've never really seen that. That's not something that I might not have seen before. Where now when I'm seeing a property that has 2 bathrooms and maybe 3 bedrooms, or 2 bathrooms and 2 bedrooms was another one, you can then make it into a 3-bedroom, 1-bathroom property. That's an angle that I never really knew before. So these little angles of how you can maybe market a property differently, all these little things when you're doing property trading gives you an edge over other people. And it means that you can basically look at a property and say, I know that I can trade this. This is the price that I'm in at. Because when you're a property trader, although you can look at Rightmove, although you can look at Zoopla, although you can do all your kind of automated valuations, it always comes down to gut feeling. What's your gut feeling about this? And as they say with property traders, you do need to have big balls to be able to take risk. But with that risk is basically limited because you are experienced. You might have bought something and sold something on a certain street or a certain area, and that's sold really well because there's owner occupiers in that area. So you might be able to pay a bit more for something in that area because you're a lot more bullish than the next trader that hasn't sold something in that area recently, for example. So that's the beauty of property trading. There's no one size fits all. It's different every single time. And the best thing, I'll just end this point on, the best thing is you can sell the same property 2 or 3 times in the same or a different auction and get totally different results every single time. It could be that one builder that's just sold a project, now got the cash, that didn't have it when it went through the auction last month, but now does have it. and we'll pay more for it. And that's where these arbitrage opportunities start to come up, from buying from one auction one month, selling another auction the next month, etc. And if you can layer in the value add of ripping out a bathroom and basically creating a bedroom, etc., then that's where kind of you start to really maximize the value in terms of trading.
Brilliant. I think now's a good chance to say thank you to everyone who's joining us, not just on YouTube, but on Facebook and LinkedIn as well. We're kind of bombarding people's feeds with this. And obviously, thank you to Saif for kind of going into a bit of the nitty gritty here. But there are 2 points I kind of want to expand upon, because I think some of the value behind the comments you've made might be lost on an audience that doesn't really understand the metrics of how a trade works. Obviously, understanding your gut and following, backing yourself as a decision maker is a huge part of it. But you've mentioned arbitrage, so it might be worthwhile just going through what arbitrage is, what that looks like in the lens of trading, and also you share the same opinion that we do, right? Which is, you've mentioned risk, and you've mentioned in your mind, based on your skill set, that trading is the least risky thing that you can do in property. Now, we share that. We understand. We look at developers and we see that can go wrong very quickly. But I think it may be valuable to go into some of the reasons why you hold that belief. Obviously, apart from the fact that you've completed 300 plus transactions which back up your belief. But if you can go into that, we have some questions already in the chat. We will get to those, guys, so keep those questions coming in. We're not ignoring you, we promise. But for the next couple of minutes, myself and Piotr are just going to take Saif's full attention and ask him a bunch of questions.
Yeah, Jay, I love that. Those are two really, really good questions. And let's address the arbitrage point to start off with. So you get a bottle of water, okay? And that bottle of water can be sold in a Costco at wholesale price for 20 pence, for example, okay? That same bottle of water will be sold in a supermarket for 80 pence, right? So you go from a multi-pack to maybe singles, but in a supermarket. And that then same bottle of water is sold in a convenience store for £1.50. The same bottle of water, 3 different prices due to convenience, which is where the arbitrage model kicks in. So you might have a convenience store and you might go to a Costco to buy your bottles of water and sell it into your convenience store. The arbitrage there is you're going pretty far away to somewhere where basically is a pretty remote location that not many people have access to. You can buy it in bulk and you can store it, and then you can afford to basically sell, them in singles basically and wait for the buyers. But in return, you're getting £1.50 for something that's cost you 20 pence, right? So the arbitrage model is effectively where you can pick something up where you've got a certain buyer that will pay you one thing in a window shop, versus if it's in the back of the shop that it's quite an item that's quite dusty in the back of the shop, not really marketed well, doesn't normally sell. Whereas when you dust it off, you clean it up, you put it at the front of the shop, all of a sudden you get people wanting to buy it. The same thing happens in auctions. I'll give you an example. A property with no viewings whatsoever, no internal access, just one photo from the outside, right? What has that done? That's limited your market, because there's not many people that would want to buy a property without viewing it. There's not many people that will want to buy a property without even seeing any pictures internally, and let alone just an external photo. So if you can take a bit of a risk and a bit of a punt, which I'll talk a bit about how you can reduce that risk, and buy that property just by allowing viewings, just by putting photos, just by putting a floor plan and maybe a 3D Matterport, whatever it is online, you've now expanded the amount of people that will be interested to buy that property, and you've created an arbitrage opportunity. And I give an example of something that I did. I bought a property where a receiver was selling it at auction. The receiver had it up for a guide price of £40,000. We ended up doing a deal with them at 43,250. Their reserve was actually 44,000, but because it went unsold 3 or 4 times before that, they got to a point where they said, in the grand scheme of things, we'll take a reduction of £750 for my reserve price. So £44,000. No access. It was boarded up with metal shutters, etc. And all we did was we took the shutters down, we did a floor plan, we allowed access, we did internal photos, and put that same exact property in actually a slightly different auction, same auction brand, but just in a different area. The next month, that same property sold for £58,000. So that is an arbitrage model of taking something and creating a bit of a marketing play where you can actually allow people to access it and actually have make a much more informed decision. So that's arbitrage, and arbitrage exists across the board. It exists in the car market, it exists in the watch market, and property is just another commodity that people trade. Coming on to your second point, which is about reducing risk. If I have one property and one property only that I'm going to trade, that is highly risky, because that one property could either lose you money or make you money. So that's 100% negative result or 100% positive result. Whereas if I had 10 properties that I was trading and one of them lost me money, 2 of them broke even, and 7 of them made me money, I've lost money on 10% of my stock and I've made money on 70% of my stock. So overall, as an aggregate, if anyone watches football, you've got aggregates, home and away. Same thing in property trading. As an aggregate, you look at, I've lost money here, but I've made a lot of money on these other properties. And overall, you want to make a general net profit. And that's where property trading is actually less risky than people think when you do volume. Now, to start off with, you have to start with one. So I'm not saying don't start off with one because it's risky, but I'm saying as you start to do more property trading, even if you did the first property trade and you broke even, the learning from doing that way outweighs making any money on that. So if you make an actual profit on your first property trade, I mean, you're way ahead of any of the property traders. I can tell you that for sure. So I think it's really, really important. Don't just focus on just the money to start off with. Focus on trying to actually learn and get the experience and build up your contacts, your knowledge. As you know, having really good contacts in this industry of how you can exit it. Obviously, speaking to the likes of yourselves with what the best auction is for the different areas, for the different asset classes, and speaking to other traders about what's doing well in the markets. What generally is selling. And my favorite thing is, if you've got time on your hands, just watch a live auction. You're not going to lose anything. Watch a live auction, look at, predict in your head what you think the price is going to sell at, and then just go on Rightmove, go on EIG, go on all these different platforms and look at what properties actually sell for, and then try and predict what you think they'll sell for. And that's probably the best exercise people can do today to learn more about property trading.
Brilliant. I just want to say that you mentioned about following your gut feel. But I think you can only follow the gut feel if you have like certain good habits and you're in a good environment where like you can rely on kind of your internal assessments, and also the feedback from the environment is supporting your decision making. Because there are people, especially when big money is involved, people can get really nervous. And then that really flows off the gut and everything else. That's why the environment is super important for you being able to like follow your gut later on. And
and network is so important, Piotr, because I've had it so many times before where I've received a property down in the southwest somewhere, which I've not really been down to very often. I don't really buy a lot of properties down there, but we know people in our network where they live down there, they've traded down there. They might have good builder contacts. They might actually understand different things. And they might be able to come back to you and say, actually, this is a non-standard construction property, or actually this street is not very good. And having that network of people is what allows you to actually have a better gut feeling, because that is a cheat code. But at the end of the day, having different people in different areas and people with different types of knowledge is where you're actually going to be able to excel as a property trader, which is super, super important.
Yeah, amazing. Everyone needs someone like Ed Kleins who can advise.
Shout out to Ed. I'm not going to lie, shout out to Ed, but also shout out to Jay. When it comes to especially London properties and short leases and stuff like that, Jay knows his onions. Simple as that. Especially the London market, he knows it like the back of his hand, which is a massive help when you're looking at the London market from the outside.
Yeah, and I think that's a great thing about both Jay and Oliver Adams. I mean, both guys been managing the top auction houses in the UK for a number of years, and I think if you see so many properties going through your desk and so many contracts, so many buyers and sellers, you then have a database that you can rely on to kind of think about valuations and potential problems.
And I'm going to say this.
I'll tell you what I think is really valuable, and not to understate it, but I think one of your biggest strengths as a trader is your ability, your understanding of arbitrage is just stunning, right? And I think that comes from your farmer days, understanding that markup, how the arbitrage works, and obviously how you network. But I think it's important, and this isn't to answer some of the questions that are in the chat. or just to kind of like dismiss things as, oh, it depends, or it's gut feel. But I think having that core understanding of arbitrage, having that awareness, where to look for data, how to perceive information, how to take something from price X and market it at price Y, and price Y be as attractive, if not more attractive than price X, is huge. And you do that sometimes without even stepping foot in the property, not even doing a refurb, right? And that's the kind of thing that I think is, you know, you haven't really mentioned that clearly, but that's going to blow people's minds. You know, of the 300 properties, Saif, how many have you viewed personally, been inside, or done any works on? Like, just a rough figure.
Yeah, I'd probably say we did. And when I say works, I mean very, very light work. So that might be just change carpets or paint or, you know, get rid of stuff. Basically, probably about 5 to 10% of them. Viewed, I think we probably viewed less than 30% of them, to be honest with you. And this is sort of another thing of the mindset shift that I went through when I went through that kind of mastermind, was I was going out and viewing every single property. I was going out and trying to do everything myself. And actually, I never spent enough time behind the phone and behind the laptop. And post that, I thought, well, how can I actually leverage my time and actually reduce the amount of time that I'm wasting? Because I'm wasting so much time here, going out and viewing all these properties, putting all these offers, and 1 in 50 transactions would come through. So that's where understanding how to leverage things is really, really key. And that comes from a point of view of, you know, speaking to people like agents, speaking to people like auctioneers, etc., and just setting the tone of, look, realistically, this is where we're going to be. We're looking to buy properties. We're looking to sell them. We're property traders. We're not property investors. So we're not looking to stack this on an investment. We're not going to view properties until we actually understand whether they're going to be accepted or not. And we might not even need to do a survey on the properties. We might not even need to do searches. If you can buy the properties in at the right price, you don't need to do any of all of that. As you start to basically pay more and more for the property, the risk starts to go up. And as the risk starts to go up, you have to then start doing searches. You have to then start doing surveys. You have to then start viewing the properties. So the reality is the best deals we've ever done are the deals we've never viewed, never done searches on, never done surveys on, etc. And that's the reality of being a property trader from a risk perspective. But one thing I wanted to touch up on, which I think is really, really key for everyone, is people think being a property trader means you need to have this fancy cash buying business. You need to be able to do all this lead generation. We need to be able to, you know, have a big operational business. And it couldn't be further from the truth. The reality is, and some of the, actually probably the best property traders I know out there have none of that. They pick up properties from the market, from auctions, and a large part of the time it is from auctions, and they'll sell them on again and they'll make good profits. Give you an example. We bought a bungalow from one of the auctions. So it was on the market, and we picked it up for £153,000 plus fees and disbursements and everything else. We were in at £160,000. Okay. So 2-bed semi-detached bungalow. It was there. It was on the market. Anyone could have bought it. We then put it into auction last week. It sold last week. Same property, 3 weeks apart from completion to completion. It sold last week for £200,000 plus all the auction fees and things like that. And that's just to give you a clear indication of being able to buy and sell something and find that point of difference. So just in terms of the kind of what people think of, oh, I have to buy everything off market. Off market stock is great, don't get me wrong. But I'd say the majority of what we trade now is not off market. The majority of what we trade is basically stuff that's on the market or in auctions currently. It's just about trying to pull the trigger, find an angle on things, and just basically take a bit of a leap of faith.
Amazing. Well, I think it's time to take some questions. We've got about...
Let's not keep everyone waiting. Yeah, let's do it.
One waiting. I think we'll keep all the rest for the retreat, and we can't share everything on the live here. But guys, if you're watching this and you're not subscribing to our channel, make sure you subscribe. We release videos every week and sometimes twice a week. And let's just address some of the comments. So there's a comment from a person with a very cryptic nickname. What's your average profit per trade?
So I think profit per trade is mainly done on a percentage model. So generally speaking, we're averaging about 15 to 20% per trade. If we make 5%, are we happy? Yeah, we've not lost money, so we're happy. if we make 30, 40, 50% on our trade, or 100% on our trade, those are anomalies, but those are the ones that, you know, you really sort of, it really puts a smile on your face. But to be completely honest with you, 15 to 20% is where we're averaging. If we can get 15%, we're more than happy. If we get 20, then we're extremely happy. But yeah, it's not sort of the big margins that people think it always is, of, you know, 100% on every single trade. It's very much a case of doing volume and averaging around 15 to 20.
Excellent. There's another question here, well, both from Tom. They kind of connect. How do you stack a trade? And then that's extended by how do you work out what you can pay for a deal to sell it at auction? So they're very well connected questions there.
Yeah, good questions. So I suppose it's basically trying to understand what the end value is of a property. So i.e. GDV, if it's done up and when it's done up, figuring out how much potentially it's going to need in terms of refurb costs. Now, I'm not going to send a builder in. I'm not going to actually do a proper, I'm just in my head going to calculate not what I'm going to actually refurb it for, but if someone was going to look at that, a layman person is going to look at that and think, how much is that going to need to be refurbed? 30,000, 40,000, etc. And I'm going to work that back, and I'm going to really try and understand how much I think the actual property is worth today in its current condition, and probably work back around about 15% margin from that. Now, in certain cases, people really underestimate the refurb cost. So it might actually be a 40 grand refurb cost, and people might underestimate it to be 15, 20,000. That could be because they're builders, they can do things cheaper, they have lots of projects in the area that they need more of, etc. So, you know, and they can get economies of scale. So that's where you can actually make a lot more money, where people underestimate refurb costs. Where if people underestimate the cost it's going to take to renew or basically, renew the lease, for example, or extend the lease on a short lease flat or a short lease house or something like that. Those, again, are the arbitrage plays. But generally speaking, we're probably looking around about sort of anywhere from 10 to 20% below what we think it will sell for, based on GDV minus refurb costs.
Brilliant. What steps to undertake trading, and what do you look for in an auction lot to make this work? What could be potential issues? Wow, these are 5 questions in one question. So yeah, first of all, like, how do you find it? How do you identify a potential trade? Like, what would that be?
So I think when we're looking at trading, we're not looking at what everyone else is going to look at. So if you try and look at what the popular things are, like low guide prices, we're not attracted by low guide prices, because we understand that that is probably one of the best marketing plays out there to try and attract a lot of people to buy the properties. So we're looking at the opposite. We're looking at high guide prices, for example. So what we're actually doing is trying to figure out what the normal attractive vanilla stuff is, and trying to do the opposite in terms of when we're finding a property to buy. And then when you try and sell a property, you try and do the opposite of what you actually did when you found a property to buy. So in a roundabout way, you're looking at the stuff that doesn't look popular, doesn't look sexy, and you're trying to make it look popular and look sexy when you come to sell it. And I'll tell you a bit about, and I'm sure Oliver Adams doesn't mind me saying this, but Oliver is definitely one of the best traders out there. And he told me about a property. Again, it was perfectly on the market in one of the auctions. He picked it up and he sold it, and he arbitraged £100,000 for one reason alone, which was the pictures of the front of the property were terrible. He basically cut everything back, made everything look much, much better, much slicker. And just because of that loan and giving it a bigger, longer marketing period and a push, he arbitraged around £100,000 on a property. So that's just to give you an example of trying to buy stuff that doesn't look great, and then obviously making it look great and making money from it. And that happens on a day-to-day basis in the property trading world.
Amazing. There's a comment here. It's how can one trade properties? The stamp duty is supposed to pay cost. How does this work when trading? How about the dates between one auction and another?
Yeah. So look,
even bridging costs as well. Like, probably that would come into this.
Yeah. So property. The difference between property trading and everything else, investing, developing, etc., even flipping, is that property trading is the only thing that has certain stamp duty exemptions, right? And it's not something I'm going to go through today. It's a very long list of stamp duty exemptions. That's probably something that we kind of touch up on. That's an hour in itself, basically, to talk about when we're at the retreat. But the stamp duty exemptions that you get when trading is a hell of a lot more than you'll get with any other type of property strategy out there. So there's a long list of around about 50 different property stamp duty exemptions for property traders. In terms of frictional costs like solicitor fees, there's not much you can do about that. You're going to have to pay solicitor fees when you buy, when you sell, but that is something you can obviously include when you're selling the property, that the buyer can take those costs on. The burden of the selling fees itself, that's something that you can put as well. So there's a lot of legitimate actual fees that you are incurring when you're buying a property that you can then put onto your contract when you're selling a property. The reality is most people will price that in when they're buying the property anyway. Some people don't, but most people do. So yes, there's a lot of frictional costs, but you've just got to price that in. And if you're going to use bridging, well, that's a whole other topic in its own right. But the reality of bridging is bridging allows you to do more deals. So you've got to look at it from a point of view of, do you want to do 1 or 2 deals with your own cash, or would you rather do 10, 15, 20 deals with bridging? I know for me, I'd rather basically go at scale because it reduces risk, and you end up potentially getting, one of those 2 really big hitters, big winners out of those 20 properties. So bridging is not a negative thing. It actually can be seen as a very positive thing for property trading.
Mm-hmm.
Before we jump on to the next questions, we've got a couple of things that are really positive. We've got Yeshaya, who was part of the Auction Buyers Club. We're still very friendly. We help him out on occasion, but he's just bought a property that he's going to try and trade via auction today, which kind of touches on a previous question from Krish. As a trader, would you buy from auction and put it on the open market, or open market to auction, or auction to auction? And I think your answer is probably going to be yes to all of the above. No, Saif?
Absolutely. You just need to understand what type of person you are. If you're patient, go auction to open market. If you're impatient, go open market to auction or auction to auction. But I think, in all honesty, we do all 3 of them. We've bought stuff in auction and we're putting it into the open market, and that can work well. But you need to make sure, if you're going to be doing that, the property can be mortgageable. The property has good title, good marketable title. You're going to have to keep on top of sales progressions, make sure you're going to be quite aggressive with the milestones you need to actually get the property to completion. Because I think a large part of the open market is you lose the speed and you lose the certainty. But what you do get is you can maximize the profit. So there's nothing wrong with doing auction to open market. You just need to have the stomach for properties potentially falling through, and also making sure that you're going to keep on top of it. Obviously, auction to auction is a great method, a great arbitrage. And then open market to auction, I think, is probably the biggest thing that traders do now, is open market to auction. And you'll be surprised, people buy properties from open market all day long and put it into auction. And it could be because it's a housing association and they've not marketed it very well, and you can pick it up and put it into auction and market it really well, much better than they did. So yeah, that's kind of just to give you a bit of a flavor as to what you can do with properties.
Amazing. So we've got next question. As Tom would love to know how you work out what you can pay for a deal sell via auction.
I think we touched up on that.
We did Tom as a 2 for 1. Yeah, we did Tom as a 2 for 1.
Tom, that's a 3 for 1 now, Tom.
Oh yeah, okay. Yeah, how do you?
I think the next one is Mindy, who has asked, when you are buying, how many deals do you complete on? And this is kind of addresses a common misconception that as a trader you're not completing on the deals, but we'll go into the many different ways you can do that on the retreat, obviously. But Saif, all those 300 deals you've completed, right?
Yeah. So look, I mean, with trading, it's having tools under your tool belt, right? So there's lots of different ways that you can trade if you wanted to be creative, but also, people don't really understand the fact that actually a lot of traders will complete on a lot of properties, especially where there's stamp duty exemptions, which obviously allows you to basically have a bigger margin because stamp duty is quite a big frictional cost. But a large part of the properties that we buy, we've actually bought in and sold. Quite recently, we've been able to do a lot more on back-to-backs, to be honest with you. And I'll kind of go through different strategies. I call it the kind of Pentagon model. So there's 5 different property trading strategies that you can do. But effectively, what you're doing is when you're looking at any single deal, you need to be thinking about which tool do I use in this situation, in this scenario? And you never have 2 of the same scenarios. It's not one size fits all. So if you have someone that, potentially has a deal that doesn't have enough margin, but they're willing to sell at auction, potentially you can bring out the auction underwriting tool and say, well, look, I can give you the certainty that it will sell at auction. You get your money. We get the guarantee that we can obviously buy at a certain price. But if it does do really well at auction on that day, we can make a percentage uplift. You can as well. Best of both worlds. But look, it's not, we don't have enough time to go through all of that stuff today. That's the kind of stuff that, we need to obviously go through in quite a lot of detail, go through case studies and explain that. But effectively, there's lots of different tools you can have in your tool belt when you're trading.
Brilliant. We've got Ben 1-1 who is asking, what are the main opportunities you look for in properties? You mentioned earlier about properties with plenty of bathrooms and maybe removing one to create an additional bedroom. What are like a couple of 2 or 3 other types that you kind of think there's always good trade value in this type of property?
Yeah. So look, I mean, ultimately, these are what we call the trader's secrets, right? In terms of everyone has their own sort of little things that they like to do when they're looking at trading. So I mentioned another one today, which was basically looking for properties that haven't been marketed really well. And that comes under the umbrella of lack of viewing, lack of access. That's probably one of the biggest ones that we use quite a lot of as well. And especially we've seen a lot with things like the home REIT stock, etc., that's been selling. There's been so much arbitrage play on that without people actually understanding how much arbitrage play there's been. But you're looking at an institution that's selling hundreds, if not thousands, of properties where they have no clue what the properties are like inside, no clue if they're tenanted, no clue if they've got squatters, no clue if they're in great condition. And it's for you as a property trader to go and determine that, roll your sleeves up, get involved, whether you need to get on the ground, whether you need to get someone on the ground for yourself, and obviously do all the desktop research to figure out, are you on the positive side of that arbitrage trade or are you on the negative side of that arbitrage trade? So that's kind of just to give you a bit of a flavor as the things that we look out for as well.
Brilliant.
Cool.
And I think the last question we have here, well, not really a question. Looks like Ravi Panchal has also purchased a property recently.
Well done, Ravi.
And he's looking to trade it as an exit. So we've got a couple of people that are active in the chat, not just active to ask questions, but active in actually getting some deals done, which is fantastic to see.
I think that's one of the things as well that we're kind of looking to create that environment. I mean, we're already creating that environment around the Succession Buyers Club with many different things that we do. But we like to deal with people who are active because there is a lot of synergies that happen, especially in a fast-moving environment. So it's great that Ravi and Shaya are really on
activity creates opportunity. That's all I'm going to say. Activity is like what creates the opportunities at the end of the day. So you've got to be doing, and that's leads me on to my point of doing a trade, even if you break even, is better than not doing anything at all and standing still. 100%.
Amazing. Okay. Well, I just posted the link to our website with the retreat. And basically over there, we've got information about all our speakers who are coming. And we have information about the actual things that are happening within the retreat. Not only that, on Monday at 7 p.m., we're going to have Oliver Adams coming to us to join very similar chat like we just had with Saif. And we'll be talking about how he does trading and the kind of things that can be learned from his way of doing trading. And both Oliver and Saif obviously will be at the retreat. They'll be running different days on that retreat. We're also going to have several other speakers, such as Scott Marshall, who's the founder of Roma Finance. They specialize in short-term funding, development funding, and he'll be spending a couple of days with us in Portugal. We'll have Dylan Black, who's the founder of Property Filter. And he's really like now a leading person in this direct-to-vendor marketing and direct-to-vendor approach when it comes to generating property leads and also using tech to do that. So those are the main kind of 4 days of the retreat. We're also going to have David Sanderman with us. And several other people. So if you guys are interested and seriously considering like doing property trading as a thing, this is a place to be. The last mastermind retreat we ran was 3 years ago. We don't know when the next one is going to be. And sometimes I guess as with property trades, is like when opportunity comes, you should grab it. And I think this is a great opportunity to spend time with top property traders, top property people in the UK, and do it in a great environment in Portugal. So,
and it's tax efficient, don't forget as well. So I think the biggest thing with, in business is it can be quite a lonely environment. We're very unsociable people when we're in business. So for me, the biggest fulfillment I get is when I genuinely spend time with like-minded people, like-minded individuals. And the best thing is when you can go away and you have a free pass, because it is business and it's first and foremost business. But to be in that environment, which is quite relaxed, and actually have the conversations that you will never hear outside of that environment, is probably the most powerful thing you can have. Hearing the stories, hearing all of the kind of different ways that other people are doing things is really important. So for me, I'm even looking forward to that. I'm also looking forward to Monday at 7 p.m. I'm going to be tuning in for 7 p.m. for Oliver Adams as well. He always has some great stories, that guy.
Brilliant. So guys, if you haven't subscribed, make sure you hit that subscribe button. Again, I'll be repeating myself, but we don't want you to miss that Monday 7 p.m. and we are releasing a new video on our channel as well on Friday. It's all about the Renters Reform Act, so look out for that one as well. And if you want to get in touch with us, make sure you complete that form at this website, and Jay will call you and have a chat with you and explore doing this retreat as a way to stepping up. Anything else, guys, to complete this phenomenal live stream?
No, enjoy your evenings, and yeah, looking forward to seeing everyone at the retreat.
Amazing, guys. Have a great night.
Have a good evening.